In this video, we're going to deal with the depreciations for Creamy company. Since depreciations require a little bit more of calculation, I'm going to use the space below the table right here in order to prepare and check the formulas and prepare everything we need to know and everything we need to take into account before putting the things into the chart. Okay, so we're going to start checking how many things do we have and what can we say about them. On the one side, it says they have fridges, okay? So they have a value, they have a residual value, and this is important information to calculate the depreciation base. And then we have the information about how the company wants to do this and how the tax office allows it and so on. And then they have another asset, which is a building. And this building includes land and depreciation is totally different. Which means I'm going to calculate two different depreciation bases. One for the fridges, another one for the building. So I'm going to start with the depreciation base for the fridges. And it says their value in 60,000 minus lands, which is 0 because it's a fridge, okay, there's no land attached, and there's a residual value of 3,000. So this would be the total depreciation base. And here I'm going to add this thing so you can see the calculation. It remains in the screen. You can see it all the time in the sheet. So regarding depreciation, we're going to calculate total depreciation, which this is the company depreciation. We're going to calculate legal depreciation, and we're going to calculate over the law depreciation. So here we go. What will be total depreciation? It will be the depreciation base, and it says that the company wants to depreciate 10%. So we're going to multiply this depreciation base by the 10%. Then we have legal depreciation, and this is what the tax office allows us to do, which means it's going to be the depreciation base, but in this case, we have 12 years, which means we have to divide by 12, okay? So you see, whenever you have a percentage, you multiply. Whenever you have the number of years, you have to divide. And in any case, over the law depreciation is total depreciation minus legal depreciation. So that will be the amount. I'm going to start translating this information into the chart, okay? So in the chart, we just include legal depreciation and over the law depreciation. So legal depreciation, it's going to be a cost because this is what happens when we use these fridges in order to keep the ice cream and ingredients and so on. They lose value. So it's a cost because we need it to produce, and it's an expense because this belongs to the production department. Over the law depreciation, it's an opportunity cost, which means it's just a cost. One of the most frequent mistakes during the exam is that you place this as a payment. This is never a payment. You never pay for this, okay? So this is super important. You never write anything here. Okay, we had the fridges and we also had the building. Let's move on for the building. So we're going to do the same. We're going to calculate a depreciation base. We're going to calculate a legal depreciation, an over the law depreciation, a total depreciation, everything, okay? So let's start with the depreciation base for the building. It says that the building value is 150,000 minus lands, which are 30,000, minus the residual value, which is 0. Okay, good. So that's the depreciation base. And now it says the depreciation is 25 years in any case. This means that the company and the tax office agree that this is going to be depreciated in 25 years. So we just divide by 25. We do the same depreciation base divided by 25 for the legal depreciation. And in this case, since they agree over the law depreciation, it's going to be 0. Okay? There's one little detail before moving this information to the table. Okay? Something you need to pay attention to. it says that they bought the building on April 1st, which means this year they're not going to have a full depreciation. They're going to depreciate the building from April to December. So legal depreciation this year, it's going to be this depreciation for a full year, but we're going to use the building how many months? Let's count. April, May, June, July, August, September, October, November, and December. It's going to be 9 months. Okay, so we're going to multiply by 9 and divide by 12. And this is going to give us the amount for this particular year. Okay, and over the law depreciation will be the same. We will do the same. So in this case, it's 0. There's not going to have any impact. But in any other case, you should multiply by 9/12 because you have to calculate only for the part of the year that you're using. I'm going to move this information, okay? I'm going to move it to the table. How am I going to do this? I'm just going to add it in the same lines we were having the legal and the over the law depreciation. So on the legal depreciation, we're going to have the depreciation for the fridges and we're going to have the depreciation for the building. Okay, and oops, I did some, oh, it's plus, not multiplying. Much better now. So as you can see, the cost and the expense reflect legal depreciation for both things, building and the fridges. And in case the over the law depreciation, we should also add the over the law depreciation of the building, which is going to be 0. Nothing's going to change in this particular exercise, but in other exercise, it may have some impact. And this is everything regarding depreciation.